Welcome to the Captain's Blog. I am David McDonough, Senior Vice President and founder of Flagship Wealth, powered by Trilogy. On this blog, we try to take what's unnecessarily complicated out there in Wall Street and make it understandable to you on Main Street. While some weeks are easier than others, we will try to explain this to you in 3 minutes. The bottom line is this: Liberation Day on Thursday of last week liberated you from all of your gains that you've earned in 2025. The tariffs announced, quite frankly, were absurd. The market was pricing at a 10, 20% across the board tariff. That's not what we got. So at the end of the week, the market was down almost double digits and almost down 20% from the high we just saw in February. But we always say this to you on the blog: it's time in the market, not timing the market. Did that theory hold true this week? Here's your week in review. On Monday, we thought that we caught a break. Rumors came out that across the board, 90-day delay on tariffs. Market rallied huge in just a few short minutes. And the press secretary came out and said fake news, and the market tanked. Two of the worst days since the start of the coronavirus in March of 2020. And on Tuesday, we put on an emergency blog that said this: folks, do not try to time this market. We're one tweet, we're one statement away from a massive rally. Well, our timing was impeccable. On Wednesday, that's exactly what happened, but that isn't how the day started. Reciprocal tariffs, playground type stuff. I'll raise you 20, I'll give you 30. Truly obnoxious. But at 1 o'clock, something happened. The president, the administration announced, you know what? We are going to have a 90-day pause on the tariffs. Between 1 and 4 o'clock, I saw some positions up 20%, with the market up 12. Can you imagine selling out in the morning or selling out at 12:59 and saying, I'm going to sit this out and wait until they ring a bell? You know, this market, it's like Charlie Brown and Lucy. Charlie goes to kick the ball, she keeps pulling it. And I get why you out there have zero faith in how this is working. My partner, Bob Dolan, said this to me yesterday. I mean, I'm watching this market minute by minute change 5 to 10%. But I advise you out there to not pay attention to that short-term noise. But it is my job. But some of this truly is inexplicable. But as of this morning, as of Friday, as of 9 o'clock, the market is at least brought back up to 6% of what it lost last week. And here's what to look for next week. So as I mentioned on Wednesday, it was the best day since 2008. Do I expect that next week? No, but what I do expect is more positive headlines, compromises to happen, China and the U.S. coming to the table. Again, just this morning, China announced, you know what, we'll raise tariffs to 125%, but we're done. We're done because they're not going to buy our products at that level. So again, I'm of the opinion that China comes out with a stimulus package over the next week, and there will be some positive headlines. You can stay in the market, stay focused, know why you're invested, and we know what you're invested in. I will say this to you, that I haven't looked at my account value. Whether or not you do or not, it's up to you over the weekend. But again, know what you own quality. And maybe over the weekend do this: what are my goals and objectives? Am I taking too much risk? And if you are, rebalance into one of those positive days. Now here's your personal finance tip of the week. I've had a number of questions out there in Flagship Nation. Well, geez, with this market volatility, should I stop putting in my monthly contributions to my 401k? Maybe I won't put that money into the Roth IRA, the traditional IRA. Couldn't be further from what you should be doing. You should be buying on dips. If something goes on sale at Amazon, do you buy more or less? Well, I know in my household, we buy more. But when your favorite position, your favorite stock goes on sale, you don't want to buy it. But when the price doubles, you do. Don't follow Main Street. Follow fundamentals, and we continue to buy on dips. So thanks for checking in. We'll see you next week on the Captain's Blog.